That's my cue, huh? All right, ladies and gentlemen, welcome. Good morning. Today's another interesting day trading the stock market. And we're going to talk about what is my favorite indicator. And to that I answer, the one that makes money. And the disclaimer is important. Basically, it says you could lose everything that you put in and more, so be careful. Please read this. I'm not going to read the whole thing for you, but please read it in your spare time. Okay, just quickly to tell you who I am. I've been #1 trader a couple of years in a row, and this was using Sunny Bands and my DMA, which I'm going to tell you about today. And I've got degrees in mathematics and photography and computer science, and been programming for 52 years, and 40 years I've been trading. I was a systems programmer for Lockheed, founder of ISCO, one of the founders of ISCO. Sorry, Peter. I retired when I was 30, and I gave my millions to money managers, which I thought was a really good idea because I didn't know anything about finances or trading or anything investing. So I gave them money, and in the first 3 weeks, they lost $75,000. This is in 1980, 81. And they said, oh, we're doing something called trading futures. Just give us some more money and we'll make you another $1 million. And so I gave them more money, and it took them 2 weeks to lose 50,000. So I decided I could do at least that poorly on my own, and I started reading. Over the next several years, I read 117 books, and that's when I thought I could start trading. And I didn't trade anything for the first year of watching the market. I just watched and learned and practiced. For 8 years, I published a magazine called Trader's Catalog and Resource Guide, and these are digitized, but they're some of the covers of the magazine. And then, of course, that went by the wayside when we got the internet, because nobody wants to pay for paper anymore to publish a magazine. I do Sunday nights, I do a free newsletter. You do have to opt in to get into it. You can't just email me. So you just go to Sunny Side of the Street on my website, and it uses the things that I'm going to talk to you about today and analyzes the Dow, the E-mini, crypto, gold, bonds, and a few stocks. And when you see the PDF of this presentation, you'll be able to click on subscribe here, and you can get my free Sunday night newsletter called Sunny Side of the Street. You can see that come up right there under books and articles. This is my new website. I spent a year totally reprogramming the thing, and it's the new moneymentor.com. So please come take a look. Tell me what I've done wrong. Tell me how I can improve it. And I love suggestions. These are the books I've done. Quips and quotes on moneymentor.com. If you go out to the end where it says quips, you can see what other people have said about my work and my books and studying with me, that kind of thing. So the question is, don't all systems, and that I guess by that I mean indicators, make money? Technical analysts would have you think that, because all of their technical analysis patterns work, right? Head and shoulders, that's always going to come out the way a Head and Shoulders does. But turns out that Head and Shoulders is one of the most easily failed patterns of all of them. The systems vendors would have you believe that theirs works all the time, or at least most all the time. And those stock pickers and scary newsletter writers who want to front run your stock picks. So they all say that their stuff makes money. And there's hundreds of systems in TradeStation and multi-charts, and I've tested most of them. Back in the olden days, I researched every strategy I could come up with, and every strategy I could buy, and every strategy in System Writer, which became Supercharts, which became TradeStation. I've been using it that long. I had 18 bankers boxes of research that I'd done on trying to figure out what are my favorite indicators. And by that, I mean, what works, what makes money. So here's what I trade. Somebody contacted me the other day and said he didn't want to follow my information because he trades the S&P 500 on a 1-minute chart, and he didn't see that I do anything but stocks. So let's go through this. I trade the S&P 500 on 1 and 5 minute charts. And at the end of the presentation, if we still have some time, I'll pull up some live charts and we'll take a look at what I actually look at. As for long-term things, I do hold stocks for a week or more, month or more. That's long-term. I don't touch them. I just invest. I also trade ETFs long-term and a little bit of cryptocurrencies. I've done some of that. Here's why I trade the S&P 500. In the back of Stocks and Commodities magazine every month, they have a page called Trading Liquidity Futures. And they've got all these contracts listed. You can see the stars that go all the way out to the right and more beyond the page. That's always the S&P 500. And that's why I trade that one primarily, because it's the most liquid. The 10-year T-note's next. The NASDAQ E-mini, the NQ that people talk about all the time, are down at 7th. So I'm a little cautious about that one because it's a real good way to get slippage if you're not all the way near the top of the liquidity database. So YM is down at 19th. That's the Dow. And my motto is don't buy something you can't sell. So, like lumber, you buy lumber and then you've got nobody else to sell it to. So it has the most money-making potential, in my opinion, and it's mathematical in nature, which makes me like it a lot. And I feel that specialization is important. People who go out there and spread their money around scattershot and buy some of this and some of that and some of the other, and then they're just hoping, or as my friend Adrian Togray used to say, into wishing. So you're just wishing that the market would go your direction. So I've always felt that specialization is important. Get really good at one thing and don't jump from symbol to symbol on slippery rocks in the rapids, because you do fall if you keep scattershotting like that. I used to trade the big boy, the S&P 500 itself, which contract is SPU 21 right now, but it doesn't really trade. It just posts closing prices, and it no longer post prices that are 5 times as large as the E-mini. It actually just posts the same prices now. When I started trading it, the margin was $50,000 per contract, and the margin and the broker's fees were $5 a round turn. So no, $50 a round turn. I'm sorry. So it was expensive back then. But now I trade the E-mini S&P 500. Which used to be 1/10 of the big boy, but now they're both about the same, 5 to 10 cents difference for some reason. But that one's basically gone. But so the E-mini has a commission for me it's just less than $3 a round turn. And if the commission and the brokerage fees are too much for you, you can always try the micro E-mini, which is 1/10 the size of the E-mini. And the cool thing about that is the margin on the E-mini right now is 12,100. The E-mini moves in $12.50 increments per tick, but the micro moves in $1.25 increments. And a point move in the micro is worth $5. And the margin is only $1,210 versus $12,100 in the E-mini. So you can get going on this thing. I mean, people worry about trading futures and losing everything that they have. And of course, that's possible if you do the wrong thing and you're holding the wrong contract and holding on to a large loss. So everything's possible, but it's a good way, I think, to learn the E-mini is to trade the micro. And my motto is I don't want to be right. Okay. I want to make money. I'm not about having the best indicator or the best strategy or the best whatever. I'm just in it to make money. And that's the only reason to trade. I think people who are trading it for the excitement will get the excitement, but the excitement usually comes when the market's moving down against you, not when it's going with you. So most indicators and methods and strategy sellers and newsletter writers and stock pickers are about being right. And they will tell you next week what they picked that was perfect last week. But yeah, they're about right, being right. But the thing is, we all have drawdown, all of us, even the people that sound perfect in their trades. And the object really is to have bigger wins than losses. Which indicator works? That's the question here today. Why do I end up choosing the indicators that I choose? Because I pretty much tested them all. I've written strategies in TradeStation to optimize and find the ones that make the most money. But the bad news is most of them don't over the long term. Most of them don't make money. So how do you know that? Well, you have to test it. And I've developed strategies of how to test and test correctly so that you can feel confident that the system you're working with actually does make money. So like I said, I've tried hundreds of them, publicly available things. I've purchased many. I've downloaded lots of them. I've read the industry journals and the magazines, scouring for systems and ideas, because I love to try new ideas. And at the same time, you're trying to find a strategy that works, you're also going to be looking for the symbol to trade. And as you know already, mine is the E-mini. So you want a symbol and you want a strategy that's profitable. And like I said, I specialize in the S&P 500 because it's so mathematical. It's just easy to follow. And I've had 40 years of experience doing it. So I'm comfortable with it. So let's look for a second at some kinds of strategies. An indicator called moving averages tests simple moving averages on the E-mini, shows me that it looks pretty good. You can see the moving average. You can see the arrows where it buys and sells. And from that picture, it looks pretty good. And in fact, if I run the report from 97 to present, it makes $205,000, which is kind of exciting. Because if you can trade one contract and get that far, how far could you get if you were trading 5 contracts, right? The problem that I see with this one, see out here at the right, it says minus $8,400. That means you were sitting there on a short when it was going straight up and you lost $8,400. That's kind of a lot to take. That's almost as much as the margin. So I don't know anybody really that would sit through that one. The equity curve looks pretty good after you get past about the middle there. Sorry. So you have to sit through what, 160 or 70 trades first, where you're basically making nothing to losing. After those 160 trades, I keep hitting the wrong button. Sorry about that, folks. After you get past that losing period, then it does quite well. But who knows? You might start at that left edge. You might start in the middle over here. So without any optimizing, that's what the equity looks like. So we look at MACD. What about that? Okay, if the moving average wasn't perfect, let's try the MACD. That's a popular, well-known strategy, indicator at least. Same thing. You look at the equity curve and we immediately have a problem. Even though if I go back, this looks pretty good. The arrows look pretty good. You could get all excited about that and think I've found the holy grail. I'm going to trade the MACD from now on. And in fact, when I was a young trader, I traded MACD in combination with the ADX, which was back then one of Jake Bernstein's strategies that I got out of a book of his. So that worked quite well for a while. Somebody asked on the chat room, what is an equity curve? That's a very good question. An equity curve is how many dollars you are making with your trading system. So you start with nothing in your equity, no profit. And you lose down through here, lots of losses. Every time the chart, the graph, the line that I'm showing, every time it moves up, you are adding profit, adding equity to your account. So this is a chart of how much money you are winning or losing. Optimizing the MACD. So let's try the MACD and see what we get if we optimize. Much nicer equity curve, right? Looks exciting. Here's where the psychology comes in this one. you see we have a long sideways period from about 190 to 300. We don't make any money. We give money back all the time. So you've got 110 trades there that you're going to be real disappointed in. That's usually where people give up the system that they're using because it's failing in their minds. So they give up that system and they go hunt for another system. And then this same pattern happens again. They do the same thing. And then so they jump from system to system, never really specializing and getting really, really good at any one thing. On further inspection, however, we can see that from this vertical line to this vertical line, we're holding a short that goes on for almost 2 months. And I don't know anybody that's going to enjoy sitting through that sort of drawdown. It's just too hard to do. And here's the trades list. And you can see the other one had $8,000 loss. This one has a $12,000 loss. But this is the optimized MACD. Now, that tells me that a lot of people are doing the same kind of thing, optimizing, and not noticing that $12,000 loss. And here is the problem with that optimization. You see these input values right here, 15, 31, and 12, 18, 15, and 13. So for the MACD long entry, that's what LE stands for, and the MACD short entry, these are the input values that the optimization decided were the best, right? Problem here is that those two numbers, 15 and 31, are fine, but 18 and 15 is telling me that when the shorter term moving average crosses over the longer term moving average, that doesn't look right. 18 is not shorter than 15. So we've got them backwards. This time I'm going to include a condition that'll only accept the parameters if the fast moving average is actually less than the slow moving average. So we want something like 8 and 13 or 5 and 10 or 5 and 12 or something where the fast moving average is a smaller number than the input for the slow moving average. So I put in a condition that says if length 1 is less than length 2, begin. So that way it doesn't test backwards inputs. And now you see we have lots of nice, this cyan dotted line goes from the trade. If it's cyan like this, it shows us we're profitable. When it's red, see this one on the right-hand side, it's red dots. That shows us that we're not profitable. So at least here we have more cyan lines. We've got less profit, total profit, but the average trade net profit is higher. And the CPC is higher. And now I have to tell you what CPC stands for. How do we know if a strategy is any good? So I invented something that John Bollinger put out a letter or an article, I think it might have been an article once, where he said that only if the ratio and the, well, what's the other number? I can't remember the other number right this second. But only if those two numbers are above 2.0 is the system tradable. And I found that it doesn't have to be that strict. You can still have a profitable system if you do this. Multiply these three numbers together. Profit factor, that's what I was trying to think of. Profit factor times percent profitable times the ratio of the average win to the average loss. Profit factor is PF, percent profitable is P, and ratio average win to average loss is R. So you multiply those three numbers together, and if the result is greater than or equal to 1.2, then I'm willing to trade the system. If it's less than that, I'm not willing to even touch it. In this case, where we were just looking at profit factor was 1.35, percent profitable was 0.44, ratio was 1.71. If you multiply them all together, you get 1.02, which is not enough, not greater than 1.2. So it looks good, but it's not robust enough to trade. And the only way you really know this is to multiply these three numbers together. There's a software called Build Alpha. David of Build Alpha included the CPC in his statistics, which I thought was very nice. So let's be realistic. We need to account for slippage. You're going to lose a tick or two on either side. Commission, I put in $3 for commission. And our net profit now drops to $81,000. But our broker's happy. We've paid the broker $36,000. So that's what happened to all that profit. If you don't test with the brokerage fees and slippage in place, you will think that you have a profitable system when what you're doing really is paying your broker. Let's try something else. John Bollinger, famous John Bollinger. So we might as well try Bollinger Bands and see what that does. So there's the Bollinger Bands, and it's similar in some ways to the Sunny Bands, not so much in important other ways, but this is what it looks like. And if you pick, there's a Bollinger Band strategy available on TradeStation.com. I just picked up that one, and you can see here we've got a nice win, a nice win, a nice win. A lot of cyan there. Looks like this might be the Holy Grail, right? 79,000, same time period, same everything, except look at this, $673 per trade. That's way better than the amount that we had on the other system. So now we've got a profit factor of 1.46 up here. We've got a percent profitable of 0.66, actually 0.67, and average trade of 673. But the ratio of the average win to the average loss, you see around here, is 0.72. 0.72. That's going to bring us down some. So what is the Bollinger Bands CPC index? 1.46 times 0.6695 times 0.72 is 0.70. Not tradable in my book. That's just way under. That's half of what it should be. Even though it had a lot of cyan and it looks really good for some reasons. So what if we optimize Bollinger Bands? I don't know that anybody has mentioned that to me before, but we can do that. And instead of 2 standard deviations, normally he has an exponential moving average in the center. And then the Bollinger Bands are 2 standard deviations to the outside of the two. The one exponential moving average. He uses 1 average, I use 2. So normally the moving average length is 20. I optimized for Extrema and I got a shorter LE or long entry moving average and a longer short entry moving average, which is interesting. And now we're back up into the range that the other system was in. But if you'll look down here, we've got $1,000 in the average trade now. Average trade is worth $1,000, and that's nice. Very nice to have $1,000. We can always, with $1,000, we can always trade 2 contracts or 5 contracts, right? Now, again, this is for the E-mini. This is not for the micro. In the micro, it would be $103 instead of $1,000. Same concepts, just 10th the amount of money. Profit factor on this is 2.11, 68%, and the ratio is 0.98. So that just means that the average win and the average loss are about the same size. That's a lot better. But what is its CPC index? We don't know yet. 211 times 0.68 times 0.98 is 1.41. Better than 1.2. It passes muster, but not by a lot. In fact, I like to see CPCs above 3 when I'm testing and trading things. I don't like CPCs down to the right at the edge of the minimum. And on it goes. The research, more and more and more research. And in fact, it's more fun to be a programmer and a researcher than it is to be a trader. When you're doing it right, trading is boring. And that's why wannabe traders often keep chasing system after system, and they don't settle down long enough to get good at any of them. Between that, it's more fun to research, and the fact that you can't sit through lots and lots of losses, it's very difficult. That's why people are jumping around all the time. In my early research, I realized that Whipsaw is really the bane of a trader's existence. You can make profit and profit and profit, and then all of a sudden you get in a whipsaw period and you lose all the money that you made in the trend. And now I'm having trouble finding my mouse. Well, let's just do it by hand. So this led me back to my master's thesis on systems, solving systems of equations. And after 18 months of research and programming, I cleared most of the whipsaw by discovering what I call my dynamic moving average, DMA, dynamic moving average. And there is just a page out of my thesis, so you can see the kind of equations I was using to solve fitting polynomials to data. And after all, stock market is data. Choppy, whipsaw, sideways, all these things mean the same thing. Consolidation. This is the period when it just eats up all your profit. So I use sophisticated smoothing algorithms to flatten the whipsaw. And we can look here and see these yellow zones. Those are whipsaw. So the market's actually not going any higher. It's not really going any lower. It's just whipping around. Those three things. This is what? Amazon. And you can see that the market yesterday was down, approaching the top of this last yellow box. I'm not doing mouse. This is then the dynamic moving average. And you can see in the center of this chart, you can see that the dynamic moving average, the purple and the gold lines. Diane, I need your help. I can't get my, can I have your mouse? Trade me. The purple and gold lines expand when it comes to whipsaw time. So when the market's going sideways, the gold and purple get out of the way, and it happens again in the middle where the band is. Purple and gold. Purple's on top. Purple on top means it's we're shorting. Gold on top means we're looking for long positions. So you see how that moves out there. We've got a mouse that works. Thank you, Diane. Let's go back to that. All right. So now then, here we go. Gold and purple spread apart because we're in congestion. Spread apart again because we're in congestion. And over here again, they spread apart. Every time we're in congestion, this moving average looks very unlike any other moving average. There, and there. The DMA spreads out of the way. Now at this current, this was yesterday, look at that, how it's spreading apart again. It's not getting closer and turning down, it's spreading apart. And indeed today is an update compared to yesterday. So after I figured out that DMA and how it works, I added bands. And this is what I call, of course, sunny bands. And they are not, Bollinger Bands are on an exponential moving average, based on an exponential moving average, and mine is based on average true ranges. So the exponential moving average and the standard deviations that he puts around it tell the market where it should go, but the average true ranges tell the market where it is going. So they're based around the DMA, and that's what the sunny bands look like. And you can see how, I mean, they're bands after all. So Bollinger Bands, sunny bands, moving average in the center, bands on the outside. So what difference does that make? Let me see, I've got a question here. Do I auto trade based on my rules? No, I don't. Actually, I'm better than the auto trader after 40 years of doing this. And I haven't developed the code because I'm just busy trading. So I haven't developed the code to actually automate this, but that would be a fun thing to do. Anybody wants to program it, let me know. Okay, the discovery of the dynamic moving average and the sunny bands led then over several years later to measuring the difference between the gold and the purple lines. So why would I want to measure that difference? Hang on one second. Sorry about that. I don't need an air conditioner here. This is Southern California. So you measure the difference between the gold and purple. Let's go back 1 second. You see how the gold and purple are further apart here? So the distance is going to be greater. And as they're approaching here, you can see that the distance will get smaller and smaller and smaller until they cross the zero, and then it'll go below the line. So that, and watching that angle, led me to my dynamic moving average histogram. DMA_H is what I call it. And it is in 4 colors. You can see that it's gold over here on the left, gold, going up, tells me that gold is on top over here, and separating further apart. Then it turns red. Now that to me is a signal. I don't that the market's about to go down, and indeed it did. So if I have a red signal on the DMAH and I get a lower low, then I will short. I get a gold going back. Get gold line going back up again down here, and the market's going up. Red lines going up, market's going down. It just repeats over and over. So gold means gold's on top. Red means that gold is on top, but it's getting closer together. It's moving downward. Gold again, gold on top, red again, moving downward. Still gold on top, but moving downward. Then, and right there, right under that bar, that's where I would go short, right there on that signal. So we follow it down, down, down. It's going down, down, and then purple means purple's on top, turns green, which means it's headed back the other direction. Green would be a positive number. And so they're getting closer together and moving in the other direction. Come green over here, it's time to go long. We're gold on top. Gold is moving up. Time to go long again. Here's the most recent trade. You see long on this gold bar. Let's do it again. Long on that gold bar, short on that bar. Okay, it's just easy as can be. If we look at crypto, we can see the DMAH on the bottom, gold and red, purple and green, again, giving the same signals. I've got Fibonacci arcs on here. I've got Fibonacci. If you look down here at the COVID crash back in March of 2020, you can see that I've got Fibonacci lines, which extend out here to the right. You can see the percentages, and you can see over and over and over again how the market hits those Fibonacci lines. I've got orange lines for me are attractors, which means this line comes from prices way back or prices right, who knows, right in the middle where there's congestion, and it translates over to the right. You can see on that attractor, it hits it, hits it, hits it. Today, interestingly enough, though, that has moved crypto, like Bitcoin, has moved down below the Fibonacci line and below the attractor that I drew, and is in fact in a sell position again. I can trade stocks on my Sunny Bands and my DMAH. Of course, I still like the Fibonacci lines on everything. I put a Fibonacci lines first, then I put the DMA and the Sunny Bands second. So you can see how Microsoft is overextended over that Fibonacci line, and it came back down within it. Bonds, same thing. Doesn't matter what you trade. This one doesn't have any lines on it, but put the lines in, put the indicators on, and it's as easy as pie to. Oh, those are my two indicators. Those are my two favorite indicators, Sunny Bands and the DMAH. They tell me everything I need to know. In addition to that, of course, I like my horizontal lines. Here's gold. Same thing. The attractor from back over here, here again, and there it just hit it and came down back within that attractor. Now, the other thing is you can see that purple's on top here, but the purple became green. So that's a long signal right here. Long signal. We go up with gold, and then I don't know what it did today. Let's see. It's just touching the line today. Oh, let's go back one again. I keep going back for you, don't I? When price comes down and touches the bottom outside Sunny Band, it's giving me a long signal. I wait for the green and purple to actually tell me, but that is a long signal. And then we go up. Typically, it will hit the DMA in the middle. It'll hit that line and go back down to the Sunny Band. Come up here, you see it pausing 1, 2, 3, 4, 5 bars, and it pauses. Then it goes up and it starts for the outer band, comes back and tests the middle, goes back with that outer band, out, all the way up, and then it comes back in the Sunny Bands, and that's when I would go short. And of course, it signals the same, it confirms, because it signals the same thing on the bottom on the DMAH. Now, anybody that buys this or even gets it on a trial, I sit on the phone with you for however long it takes. It's usually about 45 minutes to an hour. and walk you through using this so that you can see just how the Sunny Bands and the DMAH work. Let's see, we've got some more questions here. Do I find options helpful for smoothing volatility? You know, I don't know how to trade options. I traded options for about a year when I was a new trader, and I even programmed up all my own options equations. And I found that the only thing I know how to do with options is to lose money. So I don't do that anymore. Do I avoid earnings? Nope. Earnings are everything's already built in price. So you can see the market's anticipation of what earnings are going to do. You can see that it's already built in price. And the Sunny Bands and the DMA tell me everything that I need to know. So yes, I hold during that period. Thank you for the question. And I can hear you asking, how about my symbol? Well, these two indicators work on any symbol, any time frame. If you want to give me a symbol after we go live on a chart, we can take a look at it. So my favorite indicator, if I can only have one, is going to be the DMAH. If I can have two, it'll be the DMAH and the Sunny Bands. And, oh, well, I can't do without Fibonacci and counting Elliott waves. So I actually need those two. And so I'm asking you, please let me have four of my favorite indicators, because two doesn't do it for me. Plus, of course, horizontal lines. I always want to keep horizontal lines. Those things make my life easy. Question, could you scalp with this? Very short time, like 1 minute. Well, what I showed you was 1 minute. I trade on 1 minute time frames and with a 5-minute confirmation. And I don't know what CrowdStrike means, Stephanie. So no, it's not only available on TradeStation, it's also available on multi-charts. Thank you for asking that. Here's someone that trades the Russell 10,000 intraday. If you can please bring up the chart, I would appreciate it. Okay, I'll do that. I don't know if I actually have that symbol, but I will do that when we go live here. Oh, CRWD stock. Thank you very much. All right, let's go forward here and see what we've got. Questions. We had that. I want to take time to answer questions, and I'm glad you're chatting on the panel. And then I have a question. I'd like you to go to my website, which is moneymentor.com. You can see it at the bottom, and take the survey. Tell me which book you want me to finish next. I'm so full of ideas and things that I want to tell you to help your life be better. I'd love to make new millionaires. I love to teach people to trade. It's my passion. I don't do it a lot. I do trade almost all the time, but I do like to help people. So let me know what book you want me to finish next. I've started Technical Analysis Made Easy, Grading the Gurus, TradeStation Advanced Topics, TradeStation 10 Made Easy, which is the latest version, which is maybe 2 years old now, but I've just switched to it recently. Or Easy Language OOEL Made Easy, which is for serious programmers who want to take control of lots more things inside of TradeStation's Easy Language. So when you get the PDF, you can click there to vote, or you can go to moneymentor.com and click there to vote on which book I'd like to be seen. You'd like to be seen. And special offer before I go into live charts. Do I have time? I do have time. Anything you order before the end of this week, just because you saw this webinar is going to be 30% off. And through the end of this week. Today's Tuesday, so you've got a few days. Or if you want to wait, then until the end of the month, it's going to be 20% off. That even includes my consulting and mentoring time, which is normally pretty expensive. And if you want a free 7-day trial of anything I've got, send me an email or give me a call. Neil Harrington wants OOEL. Okay, I'll do that for you, buddy. How about a manual on using Vantage Point software? Well, that's a good one, but you really don't need it, because if you go to vantagepoint.com or actually if you go to moneymentor.com and click on I put a new Vantage Point chart up there every night. So you can see what Vantage Point's predictions are for tomorrow just by looking at moneymentor.com. But if you want a manual, you just click on the link to Vantage Point and they give you I think it's like a 15-minute free class. You don't have to sign up for anything. You just sign up to go to the class and there you go. Watch it and you'll learn everything you need to know. It's not much to it. The gray bar on the right, the moving averages, and the sorting and searching facilities. That's about it. It's pretty easy. Question, do I ever use case bars or tick bars? Tick bars, yes. Case bars, no. I don't have her software, but I do use tick bars on occasion just to confirm that what I'm seeing is right. I don't trade them. They're a little faster than I want. It's, I drink coffee incessantly and shake my knee all the time anyway. I don't want to go faster than 1 minute. And so David and Nanka, thank you for hosting the event, and audience, thank you for your attendance. I'm going to give you a screen that tells you my contact information. So there's how you can get a hold of me. It's my cell phone. It's my only phone, but be considerate. It's Pacific Standard Time or Pacific Daylight Time or one of those Pacific times. And I answer it myself. So give me a buzz. We'll talk about anything you want to talk about. Since Vantage Point is an end of day system, do you prefer your Sunny Bands and DMA over BP? I look at Vantage Point every night. I put the chart on the Money Mentor every night, and I consider that when I'm looking at Sunny Bands and the DMA. I can't use one without the other. I can't use Vantage Point just to trade by itself. I can use Sunny Bands and the DMA by themselves. I don't need Vantage Point for that, but I do like, I put out Sunny Side of the Street last Sunday, so the day before yesterday. And in there, I said that the Dow was going to move considerably down on yesterday, and it did. Now today, Vantage Point predicted even further move down, and it hasn't done that. So I can't just go on that. I use it as sort of an overarching macro view of things, but I don't depend on that one. I depend on my Sunny Bands and DMA. Thank you for asking. All right, now we're going to close that and close that. And here is a 1 minute chart of the E-mini. So you can see, can everybody see this? David, can you see it?
Yeah, it looks good. Yeah.
Okay. So there's the Sunny, let me Control R means it will refresh the screen. There's what Sunny Bands looks like right now. It's two Sunny Bands, in fact. The inner one, which is light green, and then the purple and gold like that, that's the 1 minute Sunny Band, the light green one. And you see how it waves back and forth within the longer term Sunny Band. So that's a 5 minute. Here's the data for the 5 minute down here. So 1 minute and 5 minute together overlaid. And if you'd like to know how to do that, you go to youtube.com and search for Sunny Harrison. There's a video that will show you exactly how to do that. So we go down here and we look, and we see that right over here is where the DMA signaled short. Move it was marking was in sideways, sideways, sideways. And then it went purple, purple, purple. One green. Did we have a higher high? Yes, but I don't take it on that first part. And then we start making lower lows again. So we're down, down, down. Here we go to a green again. And as soon as we make higher highs on that one, I would take that one till it hits the DMA. As soon as it hits the DMA, I'm out of there taking profits. And then it goes down some more, et cetera, et cetera. So these green, purple on the bottom tell me when to take long trades. The red and gold on the left, more on the left and the center, tell me when to take short trades. So who wanted me to, oh, somebody wanted me to try the YM, right? And that's what that one looks like. Currently long. Green lines, green histogram says we're going up on the YM. Yeah, that's the E-mini Dow. What? Let me go back. NQ. Okay. At sign NQ. And there that is. Now we've got really kind of tiny horizontal or histogram lines here. The gold, gold, red, gold, red, gold, gold, red. So that's saying as of right there, we're waiting for a lower low. Hits a lower low on the most recent bar, and we're short. Who else wanted? Was that? Did I cover all the? symbol. Oh no, CRWD. CRWD. Short from back here. That's on a 1 minute chart. Did you, whoever wanted CRW crowdsource, did you want a daily or a 1 minute, or like I've got up here right now? Somebody else wants the Russell 2000 at RT. There you go, Russell 2000. Short from right there. Looks like we're turning around. Control R refreshes the screen. 1 minute Russell, there you go. Long term for crowdsource, CRWD, we'll give it that, and then we'll go to time frame and daily. Well, that doesn't tell me very much with the 5 minutes at the bottom, does it? I have to take that out because 5 minute and the daily chart don't combine. So we've been short crowdsource from right there. These bars are the red bars. You see how they're moving closer to the zero, and then they kind of slow down the descent right here. So it's saying they're going to try to go up, but they're not really going up yet. So crowdsource, I would have been short from right up there. All right. Any other questions? Or I'm going to say, maybe I should I put back up my information so people can see how to get a hold of me or not? Let's do that for a second. All right, folks. Thank you so much. Thank you, David and Anka. I appreciate the opportunity. And drop by Money Mentor sometime. Give me a buzz. Thank you very much, everybody.